Two stocks I own and two stocks that I talk about decently often on the channel here, SOFI and Palantir, both got downgrades in the beginning of the year from decently well-respected analysts, and the stocks dropped in a pretty major way in the first week of the year of 2024. So what were the price targets that were set? What were the reasons for those price targets being set? Do I agree with them, and do I think this is a big deal for the stocks? That's what we're going to talk about in this video, okay? First, if you're new here, I'm Austin. I'm a co-owner at cloudbusinessweek.com. I'm also a stock market investor, and as I already said, most importantly for this video, I'm a shareholder of SoFi and I'm a shareholder of Palantir, okay? Real quick, if you're not subscribed already, become one of those 2,500 or so people. As a thank you for doing that, here's some pictures of my animals. Thank you so much. Let's dive into this. SoFi got a downgrade from 750 from a KBW analyst who's very well respected, all the way down to 650, which implies about a 22% downside from the day that he made that call. And let's remember, these are year price targets, 1 year price targets. So he believes at the end of 2024, SoFi is going to be down to $6.50 a share. Do I think that is feasible? No. Do I think it's possible? Yes. I'll talk about that in a sec, but I want to just cover what the Palantir news was as well before we dive into that. Okay? Palantir was downgraded by a Jefferies analyst all the way down to $13 because basically he said the AI hype is over and he doesn't think that the AI hype is going to help Palantir in the year of 2024. We'll handle that one in a sec, but let's talk about SoFi first. SoFi is an absolutely beastly growth company with revenue and product ads and member ads not ever being their issue. Their issue has been profitability. The stock has never reported a profitable quarter, but they have forecasted many times that Q4 of 2023, which would be reported in the next few weeks, is going to be profitable for them for the first time. I do think they're going to deliver on that. They have a history of delivering on their profit numbers, on their revenue numbers, and they actually have a history of beating on those numbers as well. So I think we're going to beat in Q4. Could there be some worries for SoFi due to their fair value accounting and Fed funds rate dropping? Yes, the value of their loans that they sell, the ones that they originate, could drop by a little bit. I don't think that's going to be so detrimental to SoFi that they're going to fall back into the negative EPS category. It's possible, but I think a 1% drop in rates is not going to affect the fair value of their loans nearly as much as this analyst believes it's going to. I think it's important to remember that a stock that's about to flip the profitability corner almost always gets massive respect from the market because it opens up a new shareholder base. Company goes from beast growth company that loses a bunch of money to beast growth company that's making money, and the EPS numbers are growing way faster than the revenue. It's hard to disrespect that company even when it's already at a premium valuation. I don't think SoFi is at a disgusting premium valuation. The price to sales is higher than like those big banks that are growing really slowly like JP Morgan, Bank of America, etc., but it's not crazy insane higher. I've also heard the thought that the member growth is going to slow in a substantial way because one of the main ways they get members on the platform is by offering very high APY on their savings and their checking account. As Fed funds rate comes down, if we have those rate cuts come through, the APY on their savings and checking is probably going to drop, but everyone's is probably going to drop. They're still going to remain one of the leaders in the space on how much interest they're paying you on your savings balances, on your checking balances. So I think that is a non-issue, not really a point that we need to talk about at all. It's not like people are going to leave because SoFi drops the rate from 4.6 to 4.4 when every other savings and checking account out there is also dropping their rate at the same time. They're going to keep getting crazy origination volumes from the student loan refinances that are coming through. People don't want to stick with a crappy loan servicer. People don't want to keep their rates really high. And if rates drop, that means student loan refinances could accelerate, because if you're getting a 6% rate on your student loan right now and Fed funds rate drops, SoFi might be able to drop that rate to 5%, and now you're able to refinance again through SoFi. So I think the origination volumes are only going to get better for SoFi, and they're actually not going to get much worse. And I don't think the fair value of the loans dropping because Fed funds rate is dropping by a little bit is really going to affect the stock price in a major way. I don't think it's going to affect the fundamentals in a major way. If the stock drops to 650 though, I'll be buying more shares, okay? It's already a massive position for me, but like I said, if it drops in a major way, I will be picking up more shares. Moving on to the Palantir news. Do I think Palantir in a 1-year span by the end of 2024 is gonna be a $13 stock like this Jefferies analyst believes? No, I definitely don't think it's going to be a $13 stock. I think we'll be in the low 20s by the end of 2024. That doesn't mean we're going to have an insane upside for Palantir like we did in 2023, but I do think it'll be a nice growth year for Palantir throughout 2024, especially if we get a Republican in office at the end of 2024. That could be a big boost to the share price because people are going to get excited about the increase in defense spending, of which Palantir is absolutely a beneficiary of. I've heard some worries about people saying, well, if Fed funds rate drops, the total amount of interest income that Palantir is going to get is going to drop, and that could hurt EPS numbers in a major way. If you looked at the last few quarters of trends as it relates to interest income and then income from operations is skyrocketing while interest income is just staying flat because Fed funds rate has kind of been flat for a little while. I'm not worried whatsoever at all if Fed funds rate drops from 5.5 to 4.5. It is not going to hurt Palantir much at all, if any, in the EPS numbers. Their income from operations increasing is absolutely going to eclipse any negative that might come from Fed funds rate dropping a little bit from those bonds that they hold and the interest income they're getting off those bonds. So to make a long story short and not take up too much of your time, don't put too much stock into one analyst's opinion. Make sure that you have a real view and you're not pigeonhole focused on the one reason that they might have dropped their price target on a company. By the same token, if these gentlemen are right and we have a $13 Palantir by the end of the year and a $6.50 SoFi by the end of the year, if you were a buyer in 2023, you probably still are going to have a very nice gain on your shares. So it doesn't really matter if you're here holding for the long term. If you're looking to get out of SoFi sometime soon, if you're looking to get out of Palantir sometime soon, this might be a worry for you. But I'm holding SoFi and Palantir for at least the next 5 years. I'm here for the long haul. So if we get a little bit of a dip along the way, I'll probably just add more shares. I'm not too worried about it. The things that they're talking about here, I think, are overblown. I think the positives are going to keep on outweighing the negatives. Revenue growth, beastly. Net income growth, beastly. Income from operations growth, beastly. Product ads, beastly for both these companies. Like, come on now. They've both built an absolutely amazing moat around themselves, and I think 2024, in terms of the fundamentals, is only going to be better than 2023. That doesn't necessarily mean the stock price is going to reflect those fundamental increases. Okay, sometimes it takes a little while for the market to agree that the fundamentals and the stock price are one-to-one. It'll be interesting to look back on this video at the end of 2024, see if these gentlemen were right or see if I was right. I'm interested, but I'm not going to be selling because of these guys' price targets, okay? Hope you enjoyed the video. Let me know if you own Palantir or SoFi shares below, and let me know if these price targets worry you or if you believe these gentlemen are right. I want to hear about it. Thank you so much for being here. Have an amazing day.